So how much confidence could this inject into the markets?
Look, this is a solution that might provide some relief to homeowners who are clearly very upset that they may not get the apartments that they have been paying for. But you have to take a step back and look at the property market as a whole. And the property market is in pretty serious trouble. Earlier this year, we were seeing some amounts of improvement finally off of a really terrible late last year, but all that has gone away now. Housing specifically took a real gut punch. Sales are down, prices are down, not just compared to earlier this year, but compared to last year.
Which is why there are more concerns that perhaps property owners with finished projects could actually revolt and actually want some relief as well, right? I mean, how much help has come from Beijing so far, though?
Well, the regulators are only now starting to step in and try to correct this problem. We don't know how big this problem can get just as yet. Clearly, it could become a real crisis. So that's why you're seeing some regulatory action take place. But my concern is what happens to the property sector for the rest of this year and what happens to it next year, because some of this may staunch the bleeding for now, but this is not a long-term solution.
Yeah, so what happens? Because we're now seeing the credit stress, we're seeing banks also involved. Could this be a systemic crisis?
Well, I don't know if it's going to necessarily become a systemic crisis, right? Because when you're talking about China, you're talking about a non-commercial financial system where the government has the ability to socialize the losses at the end of the day, unlike the US or Europe. But that actually has negative implications. The biggest one being, how long do you just keep throwing good money after bad? And what does that do to your long-term growth prospects? So there are certainly some very concerning macroeconomic scenarios at play here, even if this doesn't turn into a big Lehman moment, as people often like to say.
But this is not just to do with the property market, right? This is a problem with the broader issue of productivity of debt and infrastructure financing, which we're starting to see Beijing now returning to the old playbook. You're starting to hear reports that these local government financing vehicles are finding it hard to raise cash from institutional investors. They're now turning to retail investors. So what does that tell you about, I guess, resorting to this kind of stimulus again for increasingly fewer returns?
Yeah, well, first of all, I think there is certainly evidence that there is some amounts of infrastructure development that has gotten started already, and I would assume we're going to certainly see a little bit more of it in the second half of this year than we did in the first half. That said, a couple of things. I'm not entirely sold that Beijing might be going back to its old school way of just that blockbuster growth that we're used to seeing as far as infrastructure development and so forth is concerned. But the second thing that we've talked about, I think, zero COVID. You can't do fiscal stimulus if you are going to repeatedly shut down parts of the economy, especially the most important parts.
This is fundamentally an issue with a closed market, right? Because is the risk remaining that regardless of what happens with this property sector issue, whether it blows up or not, you still have household wealth just so intrinsically tied to property in this country?
Yeah, that is at the heart of the crisis in many ways, because look, the property sector is going to see a lot of turmoil, I think, not only for months to come, but probably for years to come. We need a very serious restructuring over there, and parts of it perhaps have kicked off, and this turmoil reflects some of that. But as far as household wealth is concerned, as far as people wanting to go out there and invest more of their money in that closed economic system is concerned, their options are pretty risky as far as the property sector goes.
Haidi mentioned the idea of a closed economy here. How close is it to all of the pressures globally when we're seeing borrowing costs rising? And we have seen some hints of regulators now telling businesses, don't send your money abroad too much right now because of potential capital outflows.
Yeah, certainly the concerns are there in the equity markets, the concerns are there in other capital markets. But at the same time, I'm not sure that this is, you're again looking at a very big problem taking place. I think if you look at the scale of things, and right now, of course, investors are getting more and more spooked by what's happened there. Sure, you're seeing higher interest rates in the US, which is, of course, moving money in this direction. But I think way too early to conclude that somehow we're looking at some kind of major capital outflow crisis or so forth.
So incrementally, though, do you continue to see the debt burden for China continue to grow, that debt structures become ever more risky? And if there's one thing that they could practically change about the growth model? What should that be?
So I think one of the things during over the last couple of years that we've seen, which is quite startling for many, is the fact that big stimulus kind of got taken off the table. And this is something that has really confused a lot of folks. You've seen endless amounts of sell-side commentary, investment bank commentary saying, look, we're going to get big stimulus in China because that was the reliable way the party always dealt with economic crises. It hasn't done so this time around, which already tells you that there is some amounts of deleveraging that is finally taking place over the last couple of years, something to be lauded in many ways. The real question is, how do we see this take place over the next couple of years? Can you have a disciplined deleveraging, sustained deleveraging take place in that country? Because if so, you're looking at pretty serious slowdown in the growth rate. You're seeing pretty serious pain in the employment market, and all of that can become very, very politically risky for the party.